Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 8th of January, my first day back in 2018, comes to you from Houston. I'm here for a few days on business, and it's my first day back this year. Quite a lot to catch up on. And we start by looking at the dollar index. The dollar looking good short term, having crossed above the clouds. So we are seeing a short-term bull trend here. The key thing with the dollar, it's really very simple, is if we rise above this level here, that's bullish. If we fall below this level here, that's bearish. This is on the weekly chart, so this is a longer term picture. Is this the beginning of a recovery? If we make a new high above the high that we saw back in October this year, that would be bullish. We're still medium and long term bearish. On the cloud charts, but the point and figure charts are strong. And we do see the dollar going up in the even years. So this was true in 2014, where we saw a 20% appreciation in the currency. 2016 was a good year, so I wouldn't be surprised to see 2018 as a strong year for the dollar. Euro looking weaker short term, falling below the cloud, but again, as with the dollar inverted, we're seeing a bullishness in the short and medium term. And again, this 120 level is the resistance level, and if we fall below this 116 area, 115.75, then that would be a bearish sign and a double top really playing out. So we need to watch that. We do have some short-term upside targets, but we are just hitting resistance. We've been unable to activate this long-term upside target to 158, so really quite key there. Looking at the Japanese yen, we're seeing dollar bullishness here as well, and in fact on all three charts the dollar is bullish on the cloud, so looking strong against the yen. Sterling just looking a little bit weaker this morning, but it is looking like it's making this bullish transition against the dollar. A few weeks above this 135 level is key, and if we've got to really just hold that now. Looking at sterling against the euro, we're seeing stronger sterling as well in the short term and the medium term charts. The long term chart yet to come through. The Swiss franc, also similar to the US dollar, we're just seeing that slight recovery there in sterling as well. And the Australian dollar looking sterling just struggling here short term, longer term and medium term, long term bearish, medium term still bullish, but crossing back below the clouds. So Aussie dollar strength showing through. Of course, last year was the year for Bitcoin. Big stories there. We are bullish on this short-term chart, but there's an interesting pattern playing out. This is one of the beauties of the lagging line on the cloud, a pattern that may not be so clear. I mean, this is a bearish engulfing pattern on the weekly chart. A pattern that may not be so clear shows up in the lagging line, where we're seeing this lower high not yet making the lower low at the end of the week, but if we close below this sort of 14,000 area, back into 13,000, if we make a closing low lower than that low, that would suggest the Dow pattern coming through of a lower high than a lower low. And so just keeping an eye out, that 14,000 area becoming more and more critical. And we saw here that we went as low really as 12,000. So if we head back into those low teens, that would be quite bearish. So keep an eye out for that. S&P 500 started the year very strongly, bullish on all three time frames. Medium-term chart, we do have upside of 14%, but only the long-term chart, we're only seeing upside now of 1.3%. So there is a shortage of targets on the long-term chart. And the Nasdaq, similarly, we're seeing a shortage of long-term targets. So that is a little bit of a concern. And even on the short term, we haven't had that pullback giving us a new buying thrust. And we're probably going to need that at some point. The same with the Dow Jones. We are seeing this 14% potential, but we're seeing an absence of long and short-term targets now. The Russell 2000 does have quite a few short-term targets. We're seeing here 1.7, 2.5, and 5%. And on the long-term chart, we are seeing clearer targets. So that is looking a little bit better for the broader market. The future this morning in the US is down very slightly, but bullish in all three time frames. And the Nasdaq down about 0.2%, but bullish in all three time frames as well. FTSE 100 is making new highs. That's been in the news. We're seeing on the weekly chart that's making new highs. Really 2017 wasn't a great year for the FTSE. 2018 should be much better, and we are seeing short and medium term that's up. The concern, of course, is the absence of long-term targets on the US market. The FTSE 250 we're seeing also looking stronger, but there's an absence of targets here as well. The DAX looking strong, and here we do have clear upside targets and 49% upside, so seeing a lot of upside potential on the DAX, but again, can that do that without the US doing that? Be interesting to see. The Nikkei looking strong, bullish by the cloud, having broken out, just continuing to rise, and again, more upside targets here, so that's looking strong. And the Hang Seng has had a very strong run the last 10 days, 10 consecutive up days, so really quite strong here. And we're looking at the Shanghai market also just regaining strength and looking strong into the new year. So China looking stronger and stronger. The Sensex looking strong as well. We're seeing that rising, and the Australian market also making new highs. So stock market's generally looking pretty good. Brent crude is bullish above the cloud, has had a really good run the last couple of weeks, and we're seeing really just heading into this high 60s area. So that's looking pretty bullish too. And WTI is also trending higher. So we're seeing WTI back above the $60 mark. So that's pretty key. And certainly in Houston, where I am at the moment, that will be on everybody's lips. But the interesting thing is we are seeing Natgas still struggling despite this massive cold snap in December, where we did see the price recovering. With just the sheer amount of shale gas in the market is keeping US nat gas at low levels, and at the moment technically it's still not looking great, so not really reacting to the cold weather that we've seen in the US. And copper we're seeing here is looking bearish in the short term. We do have some downside targets of about 1%. The long and medium term chart's still looking pretty good. If we just look through some of the other commodities, heating oil looking very similar to crude oil. Coffee still bearish on most charts. The cocoa chart still bearish. Softs generally had a bad year, and they're heading into 2018 with much the same picture. Cotton is the one exception, looks a little bit better. Sugar actually falling below the cloud here, so that's looking bad. Wheat's looking lower. Grains generally had a tough time. Soya not looking great. And corn futures also struggling. If we get to gold, we see that gold is actually looking bullish above the chart. We said at the end of last year that we felt that gold would have a good start to the year. It normally does run. The interesting thing is if we take out this 1360 level, that's a big ascending triangle pattern, then broken and activated, and we do have some very big upside targets in the medium term and long term. If we break above this 1360, we activate a new upside target. So we will see gold looking better. If we go higher, then we're 1339, which is very much that level. If we can make new highs above this 1325 area. So gold looking strong, silver looking pretty strong as well. Not looking quite as good on the long and short and medium term charts. So gold is the better looking bet at the moment. Taking a look at the 10-year Treasury yields, sitting at about 2.47%, so looking bullish in all three charts as well. Apple looking strong, bullish above all three charts. Google also looking strong, making new highs with the market. That's pretty good news. Amazon also looking very strong, but again a shortage of upside targets. And Facebook really does have clear upside targets. This is one stock I should declare an interest in. So Facebook is looking better, and Microsoft I've held for a while as well, still trending up. But again, the absence of long-term upside targets is a little bit of a concern. But there are some pretty good medium-term ones there. That's it for today. Until tomorrow, happy charting. See you then.